Hello, everybody. Hello, good evening, and welcome to today's session. It is all about funding your BRRRR. I am Cherie. I am the area director of Simply Funded. Glad to have everybody here today. Definitely want to suggest you get your favorite note-taking device, pen, paper, etc. And we are going to have an information session today, chocked with a lot of great information. This should also be recorded. So we are also going to send out the replay in case you missed anything. So we have people saying hello here, saying grateful and excited to be here. Thank you so much, Alpha Property. We have, I think this is Deshawn saying hello to me. So hello to you as well. Definitely put your questions into the chat. I should be able to see them and I will answer them. And we're going to get started. Today's session is probably going to take about 25, 30 minutes. And then if y'all have questions, then we will take it from there. So again, this is Simply Funded. This is the company that I am the area director of. We actually lend only to real estate investors for real estate projects, and we lend across the nation. So if you are a real estate investor, you are in the right place officially. So the first question you may be asking, if you're unfamiliar with what BRRRR means, it is a popular real estate investing strategy in order to help you actually build a portfolio. And the interesting thing about BRRRR is that you are able to put in money one time and have that money work for you in order to help you get 1, 2, 3, 4, 5, 10, 20, 30 properties if you have the right lender working with you. So BRRRR overall is an acronym, stands for buy, renovate, rent, refinance, and repeat. So it's this system, this process of certain things that you do in order to work this system, in order to get, you know, again, 3, 10, 100, 1,000 rental properties. And these could be anything from condos all the way up to even commercial properties potentially. So it increases, the BRRRR method increases your ability to make passive income, like we were saying, increase your rental portfolio, and you can, if you buy right, you can build equity during the rehab process. Now, that doesn't include the appreciation and other things that you could potentially get as well. So, again, just the thought process behind this in the BRRRR method is you'd start with one house. You buy, repair, and rent out that one house. And then step two, you refinance that first house in order to purchase the second house. And then you repeat step one, meaning that you repair and rent out that house. And you continuously do it over and over again until you have a full rental portfolio. Now, everybody talks about the pros of the BRRRR. I'm going to also talk to you a little bit about the cons of the BRRRR as well. So the pros are you have great potential for consistent cash flow if you have a good tenant who is paying you every single month. And the reason I say with a good tenant is because a good tenant is going to take care of your property, so you should have minimal repair costs. Outside of just normal wear and tear, a good tenant is going to pay you on time, etc. And we know that from the coronavirus, COVID, that there were a lot of people who were supposed to be paying rent who did not. So that's the reason why I put that caveat in there. You can have equity on the first day again if you buy right. Another pro could be that you could have potential appreciation and tax savings or depreciation. Definitely talk with your CPA about it, but I know some of you are high earning people and you have a lot of taxes, and this could be a strategy for you to reduce those taxes as well as building up your rental portfolio. Another pro, you can continue to use that first contribution that you put into that first house in order to grow your portfolio. You don't necessarily need to continue to add more and more money like you did 10, 20 years ago before people really started talking about BRRRR as a strategy. You can buy an infinite amount of properties under BRRRR. and their scalability to this process of building a real estate portfolio. So, hey, Paulette, good to see you. Hey, Melissa. Hi, Athena. Good to see everybody here tonight. Okay, next are the cons because we want to make sure that you know what some of the drawbacks are. So, one of the drawbacks is there will be two rounds of closing costs. So, again, this is why it's important to buy right, and it's important to make sure that you have accurately determined your construction cost so that you can maximize the amount of equity that you will have in the house. And, just make sure that you are being profitable with this. You can also another con could be that the rental income may not be high enough to refinance. How do you protect yourself against that? It would be talking to somebody like me before you purchase so that we're able to check the rental income and make sure that when you are ready to refinance, that we've got the right number in there. So we'll be able to tell you, like, hey, based on what we're seeing here, this is approximately the amount of money you should be able to pull out of that house. Okay. A third con, and I'm sorry, with bullet point number two, I've seen that happen with a couple of people that I've quoted, is that the rental income they were getting was just not enough for the refinance. So that's why I put that in there. Number three is refinancing may take seasoning. So it depends. Seasoning is just how long the person has been in the property, but there are a lot of new loan products out there where you are able to refinance without even having a tenant in the property. So it really does depend on the person you're speaking with and the loan broker that you have. Number four con is the interest is higher than your primary residence. This is the cost of doing business, right? Um, the reason that the interest is a bit higher than your primary residence is because the bank considers the fact that the last thing you will let go of is your primary residence, right? With working with somebody like Simply Funded as well, the interest is even going to be a little bit higher than if you went to your credit union or your bank. Now, why would you want to come to somebody like me and Simply Funded in order to get your money for your birth strategy? It is because the loans do not go on your personal credit report. It is also because traditional banks like credit unions and Bank of America and places like that, they will only let you have a certain number of properties on your credit report and then you are tapped out. In order for you to have an infinite amount of properties on your credit report, you're going to need to use an alternative lender like Simply Funded. But the interest rate is going to be a little bit higher, which is why you need to make sure that your numbers are in your favor for this. And then hard to get traditional loans for more than four properties. So we had talked about the cons with the BRRRR strategy, right? Good to see you, Dr. Virginia. I'm glad you think that's great. Fantastic. Don't forget to put your questions in if you have questions as I am teaching this to you tonight. So, audience participation, quiz time. How many properties can you buy using the BRRRR method? How many properties can you buy using the BRRRR method? Hey, Mentor Shelley. How many properties can you buy using the BRRRR method? Infinite. Yes, as many as you want. Infinite number. Unlimited. Yes, yes, yes. Perfect. Thank you so much for the participation. Yes, you can buy an unlimited number of properties using the BRRRR method as long as you are, again, leveraging not a traditional bank, but you need to leverage a lender that is not going to put those loans on your credit report. Okay. You're saying no limit? Yes, no limit. No limit. All right. So let's talk about some of the funding that you would need because, three big problems that people have when it comes to doing the BRRRR. Number one is they don't know where they're going to get properties from. And there are people I can send you to teach you how to find properties, how to do marketing, things like that. The second problem that you have is finding good construction people. If you live in the Metro DC area, I can refer some people to you. If you don't, then I have resources, other places, and I'll reach out to the people that I know and see if they can refer you some good people. But the third issue that people have is, where am I going to get the money? You're sitting in front of a prospective seller of a property, sweating bullets because you're like, where am I going to get the money from? I want to let you know that we actually lend nationwide. So, anywhere you are in the country, we have, ourselves and our network of lenders who can help you. So, you can get money from a traditional lender in order to fund your buy and rehab. You can also get money from a private lender. A private lender is an individual person who will loan money to you in order to purchase those properties. For the most part, I will say there is a lot of private money out there, but you have to know people. And the supermajority of the private lenders that I'm running into want you to have experience. They want to know you very well in order to lend to you. So if you don't have any experience, or if you don't know a lot of people, or you need more money than your private lender knows, then a hard money lender is an option for you. So basically, we know tons of people with private money, and we put our reputation on the line with them in order to fund your deal. That's hard money lending. So we can be the go between with regards to you for that. Within Simply Funded, there are two regions that we service. The first is within 50 miles of Reston, Virginia. So if you're in the Metro DC area, then we have local private lenders that we work with. If you are not in the local area, then like I said, don't worry about it. We can still service you nationwide. We have access to a ton of loan programs that are able to help you get the funding that you're looking for. So, yes, these things do work nationwide. If we're talking about 50 miles within Reston, Virginia, except Baltimore City. We don't do Baltimore City, but we know 3 or 4 really good hard money lenders in Baltimore if you want to do deals there. For the most part, we'll do 65 to 70% ARV. ARV stands for after repair value. Yes, Chris, I work with Rob Chavez. Yes, I do. 65 to 70% after repair value is what we're looking at. So basically, if you buy a property for $100,000, just to keep the math simple, we will loan up to $70,000 on that property. So basically, if you get somebody um, to sell you the house for $50,000 and you only need $20,000 for construction, you're doing well, right? Okay. The second thing is you got to have a 660 credit score. There are a lot of hard money lenders that are requiring 680 to 700 plus credit scores. Um, there are a few that don't look at credit scores at all. We just look at your credit in order to, we need you to have some reasonable amount of credit because that shows us reasonable financial responsibility. If you don't have a 660 credit score, you can always partner with somebody who does. Okay. Number 3, newbies are welcome. There are a lot of hard money lenders who will not lend to new people. We will. We will. Okay. You get your approval within 1 business day. So if you contact me today and say, Cherie, I have a deal, I can tell you by tomorrow afternoon if we're able to approve it and how much money we're able to get you and what the terms would be. We're able to close in 10 days. These are 12-month interest-only loans. Refinance, what you want to do with the BRRRR strategy is you're going to get this loan first, and then ultimately we're going to refinance it into a long-term loan. There's no income verification. So you can be unemployed as long as you have a 660 credit score and you can get these loans. The reason for it is because we loan based on the property and not based on your income. Unlike the bank, they're going to be looking for W-2s and all of that. And our minimum is $100,000 with regard to the amount of money that you're borrowing. So again, with the local underwriting, and you'll see a picture of the head of underwriting in a later slide. You are going to need a signed purchase contract. We're going to need your scope of construction work. You're going to sign a term sheet with like here's the interest rate, here are the points, here's just overall how the loan is going to work. You're going to sign that term sheet. You're going to give us an authorization to pull your credit report. It is a hard pull. However, we do not put the ultimate loan that you get on your credit, but we do need to check your credit. You'll also need your LLC or corporate documents. There are traditional lenders who will not loan to you on an LLC. We will loan to you on an LLC or a corporation. And then you're going to need $400 for an appraisal fee as well. Okay, so that's basically how our funding works. You get an approval within 1 business day. If you say yes to the overall terms that we email to you, then we'll send you the term sheet and we'll start the whole process with getting the underwriting done and getting that loan closed for you. If you want to do nationwide funding, again, we have some partners that we work with in order to fund you nationwide. Some of the programs include something called an 80 to 90% loan to cost. So, again, keeping the numbers simple, if the cost for you to buy the property and rehab it is going to be $100,000, there are some programs where they will loan you 90,000 of that, and you have to come with 10,000. There are other programs that are out there where they will give you a 65 to 70% after repair value. And you may say, well, Cherie, which one should I take? That's where we pull out the calculator and we do the numbers, right? The third type of loan program that's out there that's pretty popular is 75% of the purchase price and 100% of the construction can be funded as well. So we do a side by side comparison, and it's not just about the amount of money that is funded, it's also about the terms for each of these loans. So, when you come to us, we will kind of look at different scenarios and we'll present them to you, and you decide on, what you prefer based on how you're going to be rehabbing the property, how long you're going to need the loan, et cetera, et cetera. Yes, this should be recorded. Yes, ma'am. Or sir. I'm sorry. I don't know, Ari. I apologize. Yes. So some of our partners require a 620. However, the supermajority of our partners are requiring a 700 plus. So my suggestion to you is if you want more options, you want to have, I would say 680 to 700. The reason they used to be 680, but in all honesty, with the economy the way that it is, a lot of them have pushed up the credit score to 700. If you don't have uh, sufficient credit, you may want to bring in a partner for this. Okay. There's no income verification. The minimum is $75,000 for some of our lending partners. Some programs accept newbies, others don't. So, what they're going to have you do is they're going to have you complete an experience spreadsheet. A lot of them like to know you've done at least 3 fix and flips over the past 3 years. In order for them to consider you experienced. And the more experienced you are, or if you have a partner who is experienced, the more experienced they are, the more you're able to knock off points and interest. So I have one borrower in Texas that's what he's doing. He needs to borrow some money, and the construction person is going to partner with him. So he's changing up his operating documents. The construction person is going to go 50-50 with the owner of the property. And because the construction person has experience doing fix and flips, that is going to bring down the cost of the loan. Oh, you're an XX. Okay. Thank you. Does a property or investor need to be in 50 miles? So we have two different programs that I was explaining. So we have nationwide programs that we offer. However, we have special programs if you're within 50 miles from Reston. But you can have a property anywhere in the nation and we're still able to serve you. We just have some special programs if you are local. The investor does not need to be 50 miles either. The investor doesn't need to be within 50 miles. They could be anywhere in the country. We do have a lot of investors, though, in the local metro area because that is where the majority of our network is. So, but they could be anywhere in the country. Loans typically close within 10 to 30 days as well for the nationwide funding. It typically can close pretty early for the fix and flips. It usually takes a little bit longer for the long-term cash out refinances. Okay, so many of you asking, what are the rates, Cherie? Tell me the rates. So here are the rates that we have right now. Purchase and rehabbing a property is for a 12-month loan is anywhere from about 10 to 14%. That's your 12-month short-term loan. 10 to 14%. They could be anywhere from no points to 3 points. This is again dependent on the experience that you have. So you're going to pay a little bit of a premium if you don't have experience. However, it is riskier on the lender. So therefore, they want you to just have a little bit more skin in the game if you are new. But then over time, as you get your experience, you're going to be able to get better terms. So, all right, those are the rates there. So, quiz. Do hard money loans require you to show your W-2s? Yes or no? Do we require your W-2s in order to give you a hard money loan? Yes or no? Low audience participation here. No, that's right. No, we don't. No W-2s needed. Yes, I love it. Thank you so much, everybody, for answering the question. No. Perfect. Okay. So let's continue then with our session. So let's say that you have, um, you've bought the property, you have rehabbed it, you have gotten to the point where you're ready to rent it out, or you have already rented it out. That's the time that you're going to look at doing a cash out refinance in order to hopefully get all of the money you put into that first property out so that you can buy a second property. Well, what are the programs for you to be able to do that? There are a couple of programs. The first one is a 70% LTV refi. LTV stands for loan to value refi. So what happens is, let's say the property again is worth $100,000. You're able to pull out $70,000. You're going to have to pay back whatever mortgage or that you well, yes, the mortgage that you got from when you were buying it and renovating the property. However, you get that money back. Let's say that you owe 50,000 in order to buy the property and fix it up. Well, then you get the difference of that. You get $20,000 in order to put into the purchase of your next property, right? So that is program number one. Program number two is something called the debt service coverage ratio loan. This is actually the more popular loan that a lot of our borrowers are getting. So what happens is that, let's say you have rented out the property. You can come to me and say, hey, Cherie, I want to do a cash out refinance. You give me the signed lease for that renter, should be a 12-month lease. Okay, so these don't really work with Airbnbs. Needs to be just a regular 12-month lease. I present it to my lending partners and say, hey, how much can we get for this with regards to refinancing? You can get anywhere from a 5-year loan to a 30-year loan. The 5-year loans have lower interest, the 30-year loans have higher interest. Um, some of them have prepayment penalties, some of them don't. So, this is where we kind of do a side by side comparison with regards to what your plans are overall for this property long term and what terms you feel comfortable with, what interest rate you feel comfortable with. The rent needs to be at least 1.25 times your new refinance principal and interest plus your taxes and insurance. Okay. So, just to give you a quick example, if your PITI, that's your principal, interest, taxes, and insurance, is $1,000, in order for the DSCR loan to work, your rent must be $1,250. Your rent must be $1,250. Put a one in the chat if you understand that overall, because this is like the key to the DSCR. So when you are considering buying a property and you know you want to do a cash out refinance, good, you all are putting ones in there. When you know you want to do a cash out refinance, you need to think about what is the rent going to be for this property versus what is the expected principal and interest. Of course, with the interest rates going up and down, you want to assume the worst. You should already know what your taxes your real estate taxes are, and then your insurance. And this is something that we can help you with on the front end before you start buying a property, just to make sure that the numbers are going to line up. Good. Y'all are saying one. Perfect. This is where the strategy really comes in before you buy a property. And there are people that can teach you how to put certain out clauses in your contract to purchase to purchase the houses. You can have out clauses with regards to if the mortgage company does not approve this, we can back out of the deal. You want to make sure that that type of terminology is included in your contracts. So that way, when you come to me and say, okay, Cherie, I got this agreement. I'm going to purchase this house, and we start doing the numbers and we're like, this isn't going to work out the way that you want it to, you're able to back out. Is program one for short-term rental owners? No, neither of these are for short-term rental owners. This is long-term refi. No, I take it back. I take it back. Program one can be used for short-term rentals. Yes. Yes, it can. All right, next. The loans are available to LLCs. Again, traditional lenders don't usually offer this, but we do. The loan does not go on your personal credit. So again, for these long-term loans, you can have as many of them as you want out there, but the rates are going to be slightly higher than traditional lenders for both of these options. So you're saying, Cherie, what are the current rates? Right now for the DSCR loans, the rates are between the mid sevens and the low eights. Right now, the rates are between the mid sevens and the low eights for that debt service coverage ratio loan. And that's anywhere from 5 to 30 years. Um, so, yeah, mid sevens to low eights. Okay. The other thing with the DSCR loans, again, is if you don't currently have a renter, then what they will do is they will consider 90% of the market rent in the area. They'll take 90% of the market rent in the area. So, what I usually suggest to people is to try to find a renter before you come and ask to refinance. But if for whatever reason you're not able to do that, that is fine as well. Okay. Question. How many cash out refinances can you do using the BRRRR strategy? How many cash out refinances can you do using the BRRRR strategy? How many cash out refinances can you do using the BRRRR strategy? Again, a little audience participation here. Unlimited. Hey, Paul. Unlimited. Yes, unlimited. Perfect. Perfect. So now you understand why this strategy is so powerful. As many as you can afford, as long as you can afford the first one, Dr. Virginia, as long as you can afford the first one, hopefully we've done our numbers right on the front end that you are able to then build your portfolio. So yeah, many. And hey, Paul. Yes, as many properties as you have. Yes, absolutely. Okay. The next thing is I promised in my introduction to this when you all registered that I will talk about funding for earnest money deposits. Now, there are a lot of EMDs or earnest money deposits that are anywhere from $100 to $1,000. I'm actually closing on a loan in a couple of days where the EMD was $500. So you are able to get creative with regards to the amount of money you're actually putting down on properties, especially if you are working directly with the seller and not going through a realtor. Okay. Even though I know there are some realtors here, so shout out to my realtors. Um, However, if you find yourself that you need a bigger down payment or you don't have the $1,000, the way to get earnest money deposits is through partnering with somebody. Partnering with somebody. Where can you find partners? There is a group called Grid. That is a real estate investment association that is nationwide. You can go to gridinvestor.com. You can also join the Facebook group as well. And I definitely suggest you come out to the meetings, meet people, etc. But you can partner with people for EMDs. The hardest thing is finding the deals. So if you find the deals, the money is out there, even for your earnest money deposits. You may also need help with funding for closing costs because closing costs are 10%, usually roughly 10% of the loan. Again, partnering with somebody is going to be the way that you get that funding, but I have another idea for you as well. You can get a HELOC. That's how a lot of people actually get started, is they get a HELOC, which is a home equity line of credit on their primary residence in order to start using that to buy other properties. So you can consider that if you have a lot of equity. I also have access to some business cards and lines of credit. Last year, I helped somebody get 40K in a line of credit for them to start a business. So, if you want to know about that, I can connect you with the right people. You can email me contact at simplyfunded.com and say, hey, Cherie, I want to know about those lines of credit, and I'll connect you with the right people. You can get a money partner, like I said, do a 50-50 split, and consider the Grid Real Estate Network, or you can email me again, contact at simplyfunded.com, or you can wholesale the deal if you feel like, hey, I just want to make my money, you know, um, and have this as cash and not, retain this property, you're able to get that as well. Just wholesale the deal. Again, great place to find people to wholesale deals to is gridinvestor.com. So just a little bit more about the business credit cards and lines of credit. They usually like a 700 plus credit score for this. They usually also like you to have $50,000 in income shown on taxes. And the great thing is, again, these do not report to your personal credit. There's also something else called the microloan through the SBA. It's actually something, this is like way for you to get EMD money, closing costs money. Now, this is not fast money. So you're gonna have to wait a little bit in order to get access to these funds, but you can even use it as marketing money as well. So, some of you need marketing money in order to get prop stream and do skip tracing and things like that. The SBA through the Small Business Development Centers have a program called the Microloan Program where you can get loans from $5,000 to $50,000. I don't know if Deshawn is still in here, D Chu, but she knows about that because she used to help administer those loans. And if you want to know a little bit more about those, again, you can email me. I'll give you some rough information with regards to how to access that. The great thing about the microloans is that they are not credit sensitive. The con is that they do take a while in order to process and get through because you're dealing with the government. The other thing is with the microloans, you have to have a business plan, like a full business plan. Um, and I've seen the ChatGPT business plans. They're lacking. Uh, they're lacking right now. You need to actually have a full business plan. So, that's just FYI for you. Um, okay, so the question is, what are some of the ways that you can get EMD and closing money? Quiz. What are some of the ways you can get EMD and closing money? I will wait for you because I think there's a little bit of a lag. What are some of the ways you can get EMD and closing money? Partners, yes. Partners, partnering LLCs and SBA loans. Grid, exactly. HELOC, exactly. Y'all are paying attention. I love it. HELOCs, exactly. A lot of people start with home equity lines of credit. The microloan through the SBA, yep. You say grandma. Grandma's a partner. Grandma's a partner, either that or she's giving you a private loan, right, Paul? EMD stands for earnest money deposit. Earnest money deposit. So it's basically the when you tell a seller you're going to buy their property, you need to give them a little bit of money along with the contract in order for that contract to be seen as valid. So EMD stands for earnest money deposit. Okay, I am almost done. So, this is our team here at Simply Funded. You've got me, I'm the area director. There's a gentleman named Mark Beckett who has 20 years of experience. He's an ace with construction. So, he is the head underwriter. If you know, if there are any concerns with regards to your construction cost, then coming to us and us having Mark take a look at it before you know, finalize your pricing with the seller, that's going to be a great way to protect you in the real estate process, right? Because a lot of people get screwed with that construction cost. Okay. Another gentleman named Coleman Bales, he is also business development. And Rob Chavez is another gentleman. He is our advisor within the company. So that is our team. And this is the last slide. There are three ways that we are able to help you. Number one is if you have a deal and you're like, hey, Cherie, can you just review the numbers with me? We actually have a spreadsheet that was created by the gentleman, Mark Beckett, that's in our underwriting team, where I'm actually able to plug in the numbers and, we're able to look at whether or not this is a good deal for you. So if you contact me, contact the simplyfunded.com. We'll schedule some time and we'll take a look at that together. And I'll even give you the spreadsheet once we're done. The second, we can help you with funding deals nationwide. And the third, if you're like, hey, Cherie, I want access to those credit cards, those lines of credit, then contact the simplyfunded.com and I am able to assist you with that as well. So I was 8 minutes off. I said 30 minutes, but it's actually 6:38 right now. I will take your questions. What questions do you have? And I want to thank everybody so much for participating as well during tonight's session. What questions do you have? I will wait just another minute because I believe that there's a lag in this broadcast. While you all are coming up with your questions, I'll give you one more story that I have. I have a client who was buying, this was in my business plan days, I should say that. I was a business plan writer for 10 years and I help people raise a lot of money, um, with me writing business plans and them getting the funding. One of my clients was a young lady who worked at the Pentagon, and she was originally from Alabama. And she had a childhood friend down in Alabama that did construction. So what they did was they came to me, or she came to me. I wrote the business plan for her. She ended up getting, I want to say $250,000 from an Alabama local bank for funding. This was her story. She set it up where they would buy houses that needed less than 30 days of renovation. So that's carpet, paint, things like that, right? And again, her childhood friend, which was our partner in business, was down there in Alabama, and he was responsible for doing all the repairs. She would be up here managing, like getting like the marketing, getting the contracts, getting people under contract, etc. Brilliant thing that she did. So she would buy the property. It would need less than 30 days of fix up. They would then find a renter in order to rent the property out. And for every three that she bought, she would sell two, keep one, sell two, keep one, sell two, keep one. Who would she sell to? She would sell to her coworkers at the Pentagon. She would sell cash flowing properties to her coworkers in the Pentagon. The last time I spoke with her, which was about a year and a half ago, she said she had a $2 million portfolio from that very simple process. So, one of the things I always encourage people within real estate is don't sell everything you get your hands on, because that's how a lot of people start being a wholesaler. But also, you want to not only keep some of the things you have, but sometimes you may want to sell things just because um, you want the cash as well. You want the cash flow coming in as well. So, um, so yeah, that was her strategy. Yes, we only do hard money funding, except for my connects with regards to the business credit cards and the lines of credit. Can't think of any. Okay, perfect. Do you have to show comps for the properties we're interested in buying for the BRRRR strategy? We can gather those comps. We gather those comps. Yeah. Yeah, that was an awesome strategy. And when she told me it, I was like, ooh, that's a good one. And then, of course, I had to write the business plan for it. And, the numbers proved out really well because she had a steady stream of cash coming in. So the bank would know that she was able to service the loan. Um, And they gave her a line of credit, just like a blank line of credit. And it was like a local bank, small local bank that wanted to see economic development in Birmingham. And yeah, yeah. So that was her strategy. So I always tell that story whenever I'm talking to real estate people. All right. I'm going to give you the rest of your Monday back. Consider it a Money Monday. That's what I call it, Money Monday. Contact at simplyfunded.com. If you have any questions about real estate investing, if I don't know the answers, I will pass you on to people who are way smarter than I am. If you need help with getting funding, of course, I want to be a resource to you. If you want to talk about the microloans from the SBA, email me. I'll give you some of the data and the information that I have. I know somebody who had super, super terrible credit who got money. Actually, I know two people who had terrible credit who got money through that microloan program. So, perfect. So you're saying, thank you so much. Thank you. Yes, you are welcome. You're welcome for the guidance and tips. Okay, everybody. I hope you have a great Monday, and I will see you sometime in the future. Take care.